All right. Well, time to get started. Good to see you guys and seeing everybody coming in. My name's Andrew Stotz, and I'm going to be talking about elections in the U.S., Ukraine, and so many other things that are kind of going on right now that are really driving the world. You know, what's happening in Ukraine, as an example, is pushing up prices so that you're getting a higher price when you buy oil, and when you buy gas and petrol. Thailand's an interesting place if you're living in Thailand because the government subsidizes the oil price rises to some extent. So you're actually protected from the free market. And if that's the case, it could be that you may have a period of time where oil prices are not so high here. But in places where free markets are operating, oil prices are already rising. So we're going to get started, and I'm going to go through a bunch of stuff. As we always do, if you have questions, just put them in the chat, and I'm going to do my best to try to answer all the questions that we've got. And so without further ado, I am now going to switch over to my PowerPoint presentation and start to talk to you a little bit about what I'm seeing. The title of this is How U.S. Midterms and the War in Ukraine Impact Markets. Now, it's painful to see losses in your portfolio. And I know that, for instance, in our Alpha Focus, we've had some losses right now. And I know that losses are happening for a lot of people right now. But it's an important time when these painful losses are happening to remember that investing is a marathon, not a sprint. The time that we need emotional control is the time that it hurts. Now, it doesn't mean that we don't take action. Of course, at times we have to take action. But generally, what you want to be careful about is not overreacting during emotional times. Now, we create our strategies for many decades. When I first presented our strategy, I showed this picture of me that my mom took when I was young. And that's me when I left America to come to Thailand in 1992. And that's me at 100 years old. I hope that I'll be continuing to manage this strategy. Our aim is to create strategies that perform over many decades. And that's our goal for both all-weather strategy and all-weather alpha focus. Now, for some of you who are looking at those portfolios in detail, you'll see they're very, very different strategies, and they're having different outcomes right now. But overall, we'll be partnering with Phenomena for many, many years to come, and we'll be continuing these strategies for decades. So think long term. The second thing is to remember that my FVMR framework forces discipline. These pictures of this guy's face just remind us that we can go from being really happy to being really unhappy very quickly with markets. It's easy to be emotionally affected by market events, which can cause you to make rash and costly decisions. I've seen many, many times when people have cut their losses just at the time that the market rebounds. And I've seen many times when people put their money in when everything seems great and then it starts to crash. So to avoid this, we stick to our framework. Our strategies rely on data and structure rather than just a feeling. And so when the market is going in our favor, we let it run for 3 months, generally 2 to 3 months, and we wait until our next rebalance. When the market is against us, we also wait. We do not just act because the market is moving. So we have become more defensive recently. In our latest revision of the all-weather strategy and the all-weather alpha focus strategy, the war in Ukraine made us more defensive. We've reduced the overall equity exposure and increased exposure towards commodities and gold. That's where we're at right now. So what you will learn in this session. This presentation will be in 2 episodes, today and then Thursday next week at 7 p.m. Today's episode is going to cover the November 2022 U.S. midterm election, the war in Ukraine, and how those are connected. And then episode 2, I'll talk about how to position your portfolio based on the midterm election and the war in Ukraine and what's going on there. Remember, you can ask your questions in the chat. I'm going to answer them at the end of the presentation. So put in your questions now. I see that Kun Supagon has already put in a question. How long do you think oil price hangover 100 will cause before it will cause recession? Great question. Keep your questions coming, and I will do my best to answer all of them. I got a lot of energy tonight. I had a good night's sleep, some delicious food, and I am ready to rock. So please bring the questions that you've got, no matter how hard they are. Now, the first thing I want to talk about is I expect the Democrats in America, not in Thailand, to lose control of the House, weakening the Biden presidency. And also, I'll highlight again that the Democrats need Fed Chair Powell to prop up markets, not to quell inflation. And finally, the war in Ukraine involves the whole West, and I'm going to show you some of the impacts there. I think a key thing that I always like to think about is that you have to be careful about just following the market, following the news. Everybody loves talking about the news, and they just repeat the news over and over again. And the point is, you have to be careful because sometimes the news is just wrong. Look at a year ago when Fed Chairman Powell said that inflation was transitory. He was wrong. Look at many times when the media is pushing some sort of narrative and it turns out to be wrong. So be careful about what's going on. Now, one of the things we've heard, for instance, that we're going to see quantitative tightening, not quantitative easing. Is that right or is that wrong? Also, we're going to see interest rates rising. Is that right or is that wrong? I have thoughts about that I'm going to go through tonight. Good. It's good to see. I see that Supercorn Nitti has also asked another question. Jeb Euro has asked a question. And Kurkwit D. Wise has also asked another question. I think Alex may help with this one. Now, let's look at what I want to talk about first. Our starting point is going back to January of 2000. And if we look at consumer price, home price, and stock price, we'll see that, in fact, stock prices have gone up massively. Home prices have also gone up quite a bit. So now let's rebase these and put them on a scale of 1 in relation to CPI. If the line is above the black dotted line or above 1, it means that that price is outperforming CPI. You can see that initially stock prices underperformed CPI when the stock price, the blue line, was below the black dotted line. But eventually we went through a massive bull run. In fact, if you look at this bull run, we're talking about straight up for a long, long time from the 2008 bottom. So in October of 2006, housing prices were 54% above CPI. In December 2021, housing prices are about 67% higher than CPI. And in August 2021, the stock market was 223% above CPI. The point is that the gaps that we've got above CPI are pretty significant now. In fact, we can see it's in bubble territory. Again, I welcome everybody onto the show tonight, and I see more questions coming in. Gentleman Knight W also has a question. I'm going to get to that. And Jeb's got another question, which I will get to. So the buzz is all about to rise as the U.S. House of Representatives primaries are coming soon. What is a primary? In the U.S., when a Republican or a Democrat is going to go into an election to get a House seat in the U.S. Congress, instead of just saying, I'm going to run, what's going to happen is that all the Republicans are going to run together against each other, and the winner of that primary is going to then be chosen to run against the Democrat in that district. And the same thing is happening with the Democrats. The Democrats, long before the election, are having their own inner party election called a primary, where many Democrats are going to get up there and the best Democrat is going to win. And therefore, when the actual election comes in November of this year, the best Republican and the best Democrat are going to go against each other. But before they do that, we call it the primaries, and they're coming soon. There's 44 out of 50. Remember, there's 50 states in America. Primaries are going to take place between May and August of 2022. So it's going to start happening in May, and we're going to start to see what's going on in these primaries and the main issues that they're talking about. Now, this is another very important thing. There's 31 Democrats that have announced that they'll be retiring their seat in the House of Representatives, and only 17 Republicans. This is a major risk for the Democrats in America, that they could lose those seats. As long as those incumbents stay in, they usually hold on to their seats. But once they decide that they're going to retire, they have a high chance that that seat is going to flip from Democrat to Republican. Not always, but this is a bad sign already for the Democrat Party. Now, the November 2022 U.S. midterm election challenges the Democrat Party's slim House majority. 218 seats out of 435 are required for a majority, and Democrats hold a slim 222 majority of seats against Republicans' 211. 2 seats are vacant right now. So on November 8th, when we have this election, U.S. voters will elect their 435 House representatives. Remember, in America, for the House of Representatives, we have elections every 2 years. Keep asking your questions as we go in. I'm looking for your questions, whether you're on Facebook or YouTube. I see that P. Tingle123 has said, what is the chance that the world banking system will split into 2 economic blocks? Excellent question, and we're going to get to that soon. So, midterm elections are every president's first test. U.S. presidents are elected every 4 years, while U.S. House of Representative members are elected every 2 years. This means that every president will face a midterm election 2 years into their term. And in theory, a president is doing well. If they're doing well, they should increase their party's seats in the House, which would allow them to be more aggressive in their politics and implementation of their plans of their party. Now, the party of the president, unfortunately, almost always loses seats in the midterms. Carter was a Democrat, and in 1979, the House shifted from 17% Democrat down to 14%. He lost seats in the House. Reagan was a Republican, and it was already controlled by Democrats, the House was, and then the House went from 6% majority Democrats to 12% majority Democrats. In the case of Bush, the first Bush, the Democrats held on. They actually increased their lead from 10% majority to 11%. And Clinton, that was one case where it flipped from Democrat to Republican. It actually flipped against him very hard. George W. Bush was the one case where the Republicans, the party in power of the president, basically expanded their seats in the House, and it went from 1% to 3% because of the war. Obama basically saw the House flip from his Democrat Party holding 9% to the Republicans holding 6%. And then basically Obama's presidency was almost over. It was nearly impossible for him to pass his agenda. And then Trump, who's a Republican, saw that the House of Representatives, which was 5% controlled by the Republicans, switched to 4% controlled by the Democrats. So it was a big flip for Trump there. So if we look all of these, the major losses, and we add them up, we can see that it's about an 8% flip or loss that we normally will see. So we're going to look at these in a little bit more detail as I go into this. So the question is, right now, Biden's Democrat Party has a 1% majority. If we look at this measure, you can argue that Biden is going to be hurt seriously. The Democrat Party is going to be seriously hurt in the upcoming November election. And if the Democrats lose control of the House and possibly the Senate also, then Biden's a dead president, or what we call a lame duck president for the next 2 years, meaning he can't do much because he can't control Parliament. Now let's look at another issue that we see. Biden's approval ratings are collapsing. we can see the green line went from an approval rating of about 55% when he first came in to now an approval rating of only 42.6%. His State of the Union address tried to get him to have a higher approval rating. And remember, one of the biggest risks that we face in politics is a politician would conceivably start a war or encourage a war to look strong. It's called an appeal to patriotism. Now, also, only Trump had a lower approval rating at this time in his presidency. And remember, Trump started low and he went a little bit lower. Biden started high and he went low. So given Biden's cognitive condition, this is likely only to get worse. So Republicans picked up one governorship in the November 2021 election. Let's look at this election just for a moment to see if it can tell us a little bit about what's coming in the November election. So what's happened is the number of governors has gone from 27 Republican governors to 28, and from 23 Democrat governors to 22. What you can see here is that Glenn Youngkin, who is a Republican, defeated Terry McAuliffe in Virginia. It's been a long time since Virginia had a Republican governor. I think it was back to 2009, a long time ago. And this was run on particularly on the rights of parents and education. And that was a main thing that he was running on. Now, this is some signal that Republicans may have a better time in November of this year. Now, keep your questions coming. I see continued questions coming. Narut Chara has brought in a question. And also Momi has also brought in a question. We'll go through those at the end. Now, the next thing that I want to highlight is expect a backlash from Republicans who believe that voter fraud was significant in the 2020 election. Most surveys of Republicans show they believe the 2020 election result was manipulated, just like the Democrats used to say that Trump stole the election through collusion with Russia. Both parties tend to blame the other and say it was a fraud. But this awareness of the election fraud in 2020 will up the pressure on Democrats and likely work in favor of Republicans. So what am I talking about? Well, the Republicans are pushing for tighter voter requirements, and this could hurt the Democrats. Because of the pandemic, U.S. voting rights were expanded before the 2020 election. It's a little bit like universities during the pandemic and high schools and schools. They started giving out kind of nice grades without students having to do that much work because they didn't know what else to do. And so it was the same in election. There was a lot of flexibility because nobody wanted to force people to come together to go vote. But remember that in the U.S. Constitution, voting is on a certain day. There is an election day, and it all is supposed to be done on that day. But what happened was people were given a lot of time ahead. They could submit by mail and all of that. Now, the Democrats want those new standards maintained and says, well, why don't we do that forever? Why do we need to go in and vote? But you have to think about it. One of the key elements of voting in a democratic society is the idea of going out and exercising your vote. If the vote is hidden or the vote is electronic, there's a lot of people that won't trust that vote. So many of the Republicans feel like all this easy voting policy should be rolled back. Now, 25 states in America have expanded voting rights in 2021, and 19 have restricted them. So it's a little bit dependent on if the state is controlled by Republicans or Democrats. But my point is that Republicans are a lot more aware these days that voting irregularities can occur. And I think that they're working hard behind the scenes to try to prevent that from happening. Now, when we talk about voter restrictions, these include things like shortening the voting times, reducing the number of locations, expanding voter ID requirements, limiting mailing in voting, and removing inactive voters from the voter rolls, and increasing supervision of the actual election. This is what is being talked about, or the legislature that's being pushed, that has to do with voting restrictions. Now, let's now take a moment and understand why Fed Chairman Powell needs to hold things together for the Democrats in 2022 and why it won't be easy. Well, first of all, we can see the Democrats are at serious risk of losing the House of Representatives for all the reasons I've just presented to you. But if the stock market and the economy starts truly collapsing, then the Democrats are in serious trouble. So you've got asset prices, and the objective for Powell there is to keep housing price rally going. That's what the Democrats would like. And to keep the stock market rally going. Nobody wants to see that crash. Then you've got consumer prices, which are pushing up hard and fast right now. And that's forcing the Fed chairman to think, oh my God, now I've got to start increasing interest rates. But that won't be easy. In fact, I believe it was, I can't remember which Fed which Fed office it was around the US, has now just come out with a 0% expectation on US GDP. The US is probably slowing down after having a big bounce back recovery. If the US is slowing down and the Fed chairman is going to be raising interest rates into that slowdown, it's all reversed. The whole point of having the tool of interest rates with the Fed, when we talk about Keynesian economics, is that when the economy is really suffering, that you lower interest rates to try to get the economy going. And when the economy is going very strong, you start to raise interest rates to try to slow things down. But here we have an economy that's probably going to be pretty weak. And what are we going to see? We're going to see the Fed trying to raise interest rates into that. The Fed chairman is in a terrible position, really, from my perspective. Then you have the economy. Fed's job is to keep the economy on track and employment on track. These are two. So you've got the Fed's goals are about price stability, they're about employment, and they're about GDP. So, and then finally, you've got the government. You got to keep the flow of funds going to the government. And right now, you can see that the government needs a lot of borrowing. And if globally people don't want to buy US dollars, for instance, imagine if you were thinking about buying US dollars and then you see that the global financial system has now gone after Russian assets that they're holding of US dollars, trying to confiscate those assets. It's going to make people think closely or carefully about buying more US government bonds. Think about China right now. China is probably pretty terrified that if the US were to call them colluding with Russia, as an example, which they already called the US president, Donald Trump, as colluding with Russia. But if they go to the Chinese and say, you're colluding with Russia, they have a risk of a huge amount of money, US dollar reserves that China's holding that could be hit. So that's a very important issue from a Chinese perspective, that it's part of the reason why you don't see super strong support for Russia from China. So what's the key points and the bottom line? Economic and safety pressures on big U.S. cities could shift some voters to be Republicans. The odds are against any president gaining House seats in the midterms. And only Trump had a lower approval rating than Biden. And it's up to Jerome Powell to hold things together for the Democrats going into November 2022 midterms. The bottom line is, I expect Democrats to lose control of the House, and that's going to weaken the Biden presidency. Let's stop there for a moment. I want to ask you to keep your questions coming. I now see another one from Lomo Fat Boy. What do you think about 2 to 10-year government bond spread? That's a good question. And we'll look at that when we finish going through the presentation. So next thing, the Democrats need Fed Chair Powell to prop up the markets, not to quell inflation. Households have deleveraged after the global financial crisis. There's been almost no increase in relative debt, that's GDP, relative to GDP. Now, if we look at businesses, which is this chart, what we can see is that leverage rose steadily after the 2008 crisis, but not excessively high. But here you can see that since 2007, government has doubled its borrowing relative to GDP. All the debt in the US economy is government debt. That's the main risk that we have. And that risk is to the currency also of the US dollar. So government debt in America went from $9 trillion in 2007 to $28 trillion now and getting close to $30 trillion. It's nearly doubled after QE 2008 from 60% of GDP in 2007 to 100% by 2019. Now QE 2020 took it to 120 from 100, which was a pretty small increase, right? So what we can see is that from 2007 to 2019, the US government increased debt from 61% of GDP to 102. The Fed was the main buyer of this government debt. When governments get scared about their money being confiscated by the US government for if they are seen as aligning with Russia in any way, they're going to be very careful in what they do, but they're also going to be careful not to buy more US treasuries. And if the world doesn't buy more US treasuries, the problem that we could face in that case is that what we would see is that the Fed would have to come in as the buyer of last resort. And when the Fed starts to buy more of the government's debt, what the Fed is doing is taking the cash and giving it to the government, and that is increasing the money supply. That's called quantitative easing. And that, I believe, is what is at risk of happening. Now, Lomo Fat Boy says, what would happen if Biden didn't win the midterm election? Excellent question, and we'll get to that. So the 2020-2021 crisis spending only increased debt to GDP to 120 from 100. It's still far below where Japan was, so there's still a lot of room that could go. U.S. government could have a lot more spending to come. Remember also that 2008 QE lasted nearly a decade. For those of you who have been following what I've been saying, I don't believe that we're going to see quantitative tightening, and I don't believe that we're going to see any significant increase in interest rates. It's too late. The Fed had its chance before, but not now, because there's too many risk factors going on. So if you're sitting there waiting for QE to come, or sorry, to quantitative easing to come, quantitative tightening to come, where the Fed starts to reduce its holdings of government bonds, I don't believe that it's going to come. Now, the total U.S. debt to GDP, we can see if we combine households and business and the government, is now at about 280% of GDP at about 60 trillion US dollars. So there's two meanings of tapering. That's slowing monthly purchases of bonds, for example, going from 80 billion to 50 billion. If that happens, we're going to see a slowdown in the government's balance sheet. In this case, the Fed balance sheet continues to rise. QE continues, but it's just happening at a slower pace. The key here is maybe the signal of a change in direction. And then there's reducing assets on the Fed's balance sheets. This is when the Fed buys bonds. Bond buying turns into bond selling, and then the Fed starts reducing its asset holding. This is something that I believe is not going to happen anytime soon, despite the fact that they've been signaling that it could. Keep your questions coming. I see a question from Miss Petite and another one from Lomo Fat Boy. Well, Lomo Fat Boy, you've been thinking a lot, which is great. Great questions. So here's why I say that I don't expect there's going to be Fed tapering. Tapering is going to lead to rising interest rates. But low interest rates have propped up the stock market and the property market since 2008. Also, the cost of U.S. government borrowing would rise and would crowd out necessary spending in the private sector. The Democrats are also at risk of losing control of the House of Representatives in 2022. And this is going to pressure Powell to keep rates low. Finally, Americans have become accustomed and they believe that the Fed can bail them out and solve their problems. That's not a free market anymore in money. Why is it that the U.S. government and people in the U.S., basically those people believe that we should have price controls in the area of money, but not have price controls in all the other areas of the economy? I would argue that not having price controls and not having the Fed trying to figure out the pricing would be a better long-term solution. But nobody believes that anymore. They all believe that the Fed can save the day. And that ultimately will lead the Fed to get there. Now, Aria asked the question, what assets that the Fed mainly is holding? The answer to this question is the Fed is holding mainly two types of assets. Number one, U.S. government bonds. And number two, mortgage-backed securities, meaning mortgages. Basically, what does that mean? That means anytime that the government needs money, they basically sell bonds and receive cash, and that goes through the banking system, but it comes ultimately from the Fed going to the Treasury. The second thing is that they invest in mortgage-backed securities to try to prop up the property market. They don't want banks to stop giving mortgage loans because then it's going to slow down the property market. And as a result, they basically tell the banks, any mortgage loans that you make, you can sell them to us. And then the Fed will buy those mortgage-backed securities. That gives you a little bit of idea about what's happening on the balance sheet. So also, there's plenty of room to spend compared to Japan. So to answer the question about what's happening at the Fed and the Fed balance sheet, you can see that there's been no quantitative tightening yet. Now you can see a tiny slowdown right here, a tiny slowdown in this line, but it's nothing significant in my mind. And therefore, for everybody that says the Fed is going to reduce their balance sheet, it's not happening now. When the Fed is reducing its balance sheet, that is quantitative tightening because they are returning the bonds and taking cash out of the system. And my argument has always been that the Fed can't do this. If they do it, they're going to cause a very tight money market because nobody else is buying the government bonds. So government bond prices will start to rise and interest rates will start to rise. And that will cause asset prices to fall. The Fed is in a very impossible position, in my opinion, at this point. So even if the Fed tapers and hikes rates, I expect the course to be reversed as soon as the stock market starts to fall. In fact, we may already start to get reversals as we see that high energy prices are starting to squeeze the market. So the key points in bottom line: households learned their lesson from 2008 crisis. Companies have steadily increased debt to GDP, but I wouldn't say that it's high. And QE 2008 lasted a decade and doubled government debt to GDP to 120. The tiny amount of QE 2020 that took us from 100% to 120% was very small. And I believe that we could have QE going many, many years in the future. Why? Because basically every time that pain comes into the market and all that, the government, the Fed is going to step in. So QE 2020, money supply increase, has not been massive. I expect the Fed to help the Democrats lessen their House of Representative losses in the upcoming election. So Democrats need Fed Chairman Powell to prop up markets, not to quell inflation. So now, keep your questions coming. I see more questions coming in. A says, is it a good time to put money in? Momi says, do you think the war between Ukraine and Russia will be prolonged? We're going to talk more about that. Because the wild card is to start a war, as I've said before, about presidents. Presidents only have gained, like in George W. Bush's case, when he had a war. And in a sense, Biden has his war right now. Samuel Johnson, a famous English writer, said patriotism is the last refuge of a scoundrel, basically meaning that politicians will try to start wars and get people behind them patriotic with the idea that by doing that, they're going to be able to remain in power. Look at what's happening right now with politicians and everyday people. Everybody is getting behind the war drums. And basically, everybody is behind, in the U.S., is behind the U.S. But remember, it wasn't that long ago. In the time that I got out of high school and was in university, we had an apology by Ronald Reagan to the Japanese citizens of America that were put in internment camps during World War II. When World War II was going on, the US government and US people got so paranoid and they got so anti-Japan that they locked up a huge number of Japanese people that were living in the US and had been living there for many, many decades and maybe even for generations. And they locked them up. And I always thought to myself, how would they be able to do that? I mean, here, Ronald Reagan was the president ultimately, as well as the Congress at the time, that apologized for what they did. And they gave each surviving Japanese family member $20,000 in reparations as an apology for what they did during World War II. And I always thought to myself, I just don't understand how people can get that hysterical. But now what we see is that that's happening with everyday Russian, a young Russian man or woman, they're going to a university in America, they're getting an American experience, they have American friends, and all of a sudden they're being absolutely shunned. This is the concept that patriotism is the last refuge. If you call patriotism, people will follow you. So be careful. This is the wild card. Wars can improve presidential approval ratings, and we know that Biden's ratings are bad. Someone once said that peace is the time between two wars, like the world is always at war in one way or another. So enter Putin into the situation. Russia's problem with Ukraine is deep-rooted. It is not as simple as some may like to say in articles that are coming out. Ukraine has been part of the Russian Empire for centuries. In fact, the original Rus people settled in Ukraine before Russia started settling further and further and further east. It became independent in 1991 with the breakup of the Soviet Union. Still, Russia never accepted Ukraine's sovereignty to some extent. Now, another critical thing to understand is that Europe is dependent on energy imports. I'm going to look at the supply gap here. And if we look at it, we're looking at the 15 largest economies. They're all heavily dependent on oil or on energy. Here we can see, if we look at Germany, they account for about 18.7% of the GDP of Europe. Their energy consumption is 3.3, and their energy production is 1.1. That is a 65.6% supply gap, and that is not a good thing. That means that they are reliant on imports. Only Norway is a net exporter of energy, which we can see there. So the largest company or the largest economy, Germany, is highly dependent on Russia. So let's talk about this for a moment. The energy crisis is going to last longer if Russia does not increase supply. Europe's dependency on Russian gas creates room for Russian opportunism. So Ukraine has been the main transit for Russian gas exports to Europe. Let's look at that. More than 50% of total Russian gas to Europe flows through Ukraine. The transit fees amount to about $3 billion annually, which roughly equals about 2% of Ukraine's GDP. Russia is aiming to bypass Ukraine for future supply to Europe and particularly to Germany. Now, here's why Germany initially was cautious about Russia approaching a Ukraine invasion. Here we can see a table that shows at 100%, let's just say when the consumption in Germany is 100% here, and we can see that the blue line shows the production, and that leaves this gap of this red bar, and that's the gap, supply gap. So how do they fill that supply gap? Well, a portion of that supply gap is just coming from imports generally, but then this portion of the supply gap from there up until this portion is coming from Russian oil and Russian gas and Russian coal. So basically, we can see that Russia accounts for around 20% of Germany's total energy consumption and 40% of net imports. The point is, that Germany is very reliant on Russia, and ultimately prices of fuel in Europe has been going up, and I believe will continue to go up. Now, I'm going to play a video, and I hope that you can hear the sound from this video. Let's see if you can hear it. If not, I'm going to read it out. It's a meeting between Donald Trump and the politicians or the leaders of Germany a while ago when Trump was president. And he's blaming Germany for signing a deal and trying to get gas from Russia and then going to America to provide funds to NATO to protect Germany from Russia. And Trump is very straightforward in this exchange. And for those people that like Trump, that's probably what they liked about him. He was straightforward. For those people that didn't like Trump, that's probably what they didn't like about him. So now I'm going to play the video and I'll just read out the captions as it's coming. So here is Trump on the right-hand side with Pompeo, and on the left-hand side is the German foreign minister and the German prime minister. So here's what Trump said.
Germany, we're protecting France, we're protecting all of these countries, and then numerous of the countries go out and make a pipeline deal with Russia, where they're paying billions of dollars into the coffers of Russia. So we're supposed to protect you against Russia, but they're paying billions of dollars to Russia, and I think that's very inappropriate. And the former chancellor of Germany is the head of the pipeline company that's supplying the gas. Ultimately, Germany will have almost 70% of their country controlled by Russia with natural gas. So you tell me, is that appropriate? I mean, I've been complaining about this from the time I got in. It should have never been allowed to have happened.
So here Trump is basically saying that it's a setup, really, what's happening. So Russia completed the pipeline Nord Stream 2 to get rid of the gatekeeper of Ukraine, basically, because the pipelines were going through Ukraine into Europe. Around 50% of Russian gas to Europe flows through Ukraine. With Nord Stream 2, which is the red line that I show up above, Russia aims to bypass Ukraine. U.S. fears that Russian expansion and Russian fears NATO expansion. Now, each side is against each other. Now, here's an interesting map of Europe. Of course, the red part of the map is Russia. And what we can see is Russia, of course, is massive. And we can see the Russian states. And here what we can look at, if we look at my pen is red, and I've got to change it to black. So just let me change my pen, and I'm going to come back here, and I'm going to look at this. So here's what we can see in this. We can see, for instance, Ukraine right here. And that was under the control of Russia. I believe that's Belarus and other countries here that were really under the sphere of Russia. And in 1988, which is close to the end of the Cold War, you can see that NATO is blue. And there's kind of a buffer here between NATO and between Russia. There's a buffer, and those are the brown countries. But now let's look at where NATO is now. Here we can see that the blue countries are the NATO countries that have been coming up close to the borders of Russia. And what's now happening is Ukraine is threatening ultimately to join NATO. And that's what Putin is trying to stop. So Russia has invaded Ukraine. US and EU have responded with sanctions. There's numerous European countries have also sent weapons and military equipment to Ukraine. But the EU is still holding back due to its energy dependency on Russia. Here we can see that Russia's natural resources make it harder to sanction Russia. Almost 20% of natural gas in the world is coming from Russia. And almost 20% of wheat is coming from Russia. About 12% of crude oil is coming from Russia. And about 9% of aluminum and 8% of copper is coming from Russia. These are massive numbers. And these numbers show that if this continues on and Russia no longer participates in the global economy, it's going to cause a shortage in oil, in wheat, food, also in gas, fertilizer, and it's going to cause a shortage in aluminum and in copper. And all of these things are going to push up prices massively. Now, also, it's interesting to look at the red bar that I've made at the bottom of this chart. Over to the left of this chart, what you can see is 40% roughly, which is where the red comes in at about 42%. What you can see is that Russia has taken its holdings of US dollars, that's the red stacked bar at the bottom, from 42% or so down to about 20%. In 2014, they had US dollar reserves of 154 billion, and now that's down to 104 billion. So even if the US was to confiscate these assets, what you're going to see is that it's not going to hurt Russia too much if they confiscate the dollars. If they confiscate the euros, it's going to hurt more. And then you'll see that gold has gone from almost nothing to be a big part of it. Now, so also, economic sanctions could drive Russia further into China's arms. Here, I'm showing Russian exports to different major countries. And the key one you can see for China has gone from 5% of Russian exports up to 14%. So what are the key points? The war in Ukraine has significant impact on financial markets. Europe's energy dependence on Russia holds back Western counteracts, and Russia might get closer to China. So how Biden and the Democrats respond to the war is going to impact the outcome of the November 2022 midterm election. What's going to happen next? Well, what will Putin do? Will he take over Ukraine or get Ukraine to agree that they will not go into NATO? How will Europe respond? We've seen the amount of energy dependence that Europe has. Will the US and NATO take action and start flying warplanes? The war is going to impact November 2022 US midterm election. Typically, war unites the US, and both Democrats and Republicans, of course, are funded by the war machine, and they're probably going to support involvement in the Russia-Ukraine war. It's going to take a lot of power to prevent America from moving into the war stance. Biden's low approval ratings may cause the Democrats to take stronger actions against Ukraine than if he didn't have low approval ratings. How will this affect the financial markets? How should you position your portfolio? Well, we've reached the end of my presentation, and I'm going to move into Q&A. But you can consult your Phenomena advisor or get on the Zoom with me next week, where I'm going to be talking about the answers to these questions. I'll try to answer those questions on Zoom on March 17th at 7 p.m. You should get a link to register on your screen. You've got a QR code there, and you can see on the screen that you can register to attend that session. Now it's Q&A time, and I'm going to open up the floor for Q&A, and I'm not going to share my screen anymore, and I'm going to discard that. And now I'm going to move into the Q&A. So remember, in the second episode of this discussion, we're going to talk all about how to position your portfolio. So now I'm going to go back up to the questions from this top and look at the first question that came in from Supercorn. How long do you think oil price will hang over $100 and cause recession? I think that what we've already seen through this presentation is that if you're excluding Russia from the oil and gas markets, you're cutting out 15 to 20% of the supply that is going to cause oil prices to continue to rise and gas prices. And the result of that is that people are going to be paying a higher and higher price. So I think that we could see that oil price could go to 150, it could go to 200, it could go to 300, it could go to 400. Who knows where it could go? But we definitely know in wartime in particular, we have massive amount of inflation. So next thing I'm going to do, and I think that it is going to be a case where eventually higher oil prices drives inflation, and that eventually causes recession. So I think we're probably talking about oil at 150, where we're really going to see pressure on the economy. We're already seeing pressure, particularly in Europe, in US. What's going to happen is US is going to have to start to produce more oil. And that, I believe, is one of the ways out of it. The environmentalists in America don't want to see it, but they also don't want to be dependent on Russia. And we saw that people don't care about the environment when they're in a situation of emergency. We saw it in COVID times where we were having a lot of pollution going around, particularly from masks and all kinds of other stuff. If you got stuff delivered to your house, you got it in boxes and bags and all that. People don't care about those types of things when they're in an emergency situation. Now, Supercon also says U.S. election is one of the factors to push war to happen. If Democrats lose, how will it impact the world condition? Well, I hope that this situation with Ukraine is resolved. I believe that Putin will start to negotiate with Ukraine and get them to say that they won't get into NATO. And when that happens, he'll back off. That's my opinion at this point. Now, I do believe that if we have war, the Democrats are going to have a little bit easier time in the upcoming midterm elections. But I do think that it is still going to be that the Democrats are going to lose control. Jeb Euro says, how far will gold go from here? I think that you could see that gold could increase another 30, 40, 50% from here. It may not happen right away, but when there's instability, I think that's when gold does very, very well. Kirkwood asked a question about the difference between SCB Gold H and TMB Gold that we choose differently. And I want to see if we had some answer from that from my team. Let's just see. So basically these funds are interchangeable. We could say that AWS is generally a bit longer term in allocation. So it's a slightly lower fee, I think. But let me ask my team to clarify that. It's not very clear to me. So Alex, if you can make a very clear statement on that, I'll come back to that and answer that. All right. Gentleman Knight W says, one of my friends likes your investment plan, but she needs to do dollar cost averaging and cannot pay the minimum of the funds in the plan. Any suggestion for her? That's a good question, which I don't know the answer to. She needs to talk to her Phenomena representative to try to see what's right for her. It's a very difficult thing for me to give advice on that. So I think I'm going to leave that to the Phenomena folks. Now, Jeb Euro says AWS rebalanced to more gold while it goes high now. Do you see it as more risky? Yeah, I mean, gold can be a little bit more risky. It's not something that's going to earn a lot of return. But I think that right now, equity markets are very risky. And therefore, the gold has some role to protect the downside. So that's why we're allocated a little bit more to gold. Now, P Tingle 123 says, what is a chance that the world banking system will split into two economic blocks? I think it's very high. I think it's very high. You've got countries that, China and Russia that are being pushed together, and they've already got, we talk a lot about the SWIFT system. China has created the chip system, and that system is like SWIFT, and they're trying to come up with ways so that the U.S. sanctions don't hurt as bad. So I think that the chance of the U.S., of the world splitting into different economic blocks is very high at this point. All right, next question from Nirachara. Do you plan to take action on other markets in AWS port, which currently also drop as well? Right now, there's no more action in AWS. I had done the work on that using my FVMR framework and focusing in on it. We rebalanced it, and now I'm not going to look at it for a few more months, and then I'll reconsider it. Now, Supercon says, what are key leading indicators to recession that we should keep watching? Well, I think the biggest leading indicator is rising prices. And right now you're seeing so many rising prices that's going to put pressure on everybody. In addition, keep in mind, we have a base effect. The 2020 economy was very low because of the crisis. So 2021 was naturally a bounce back year, but we're not going to see that bounce back effect in 2022. So I do expect that we're going to see weakening GDP numbers. And then it's going to seem strange. Why is the Fed increasing interest rates in an environment of a weakening US economy? That's going to seem strange. And I don't believe that the Fed is going to be able to do that, right? So next question. What is your view about impact from Russia and Ukraine to the Thai stock market? I think ultimately it's going to hit every market. One of the things about the Thai mutual funds that you invest in through Phenomena is that the international mutual funds have some currency hedging in them so that you're not as affected if currencies outside of Thailand start to weaken. So that is one advantage that you have. But overall, it's going to be negative for the Thai market. Now, you could say that the Thai market is dominated by oil-heavy companies that do well when oil prices go high. So the Thai economy is going to be weak when oil prices go high because every company's cost of oil is going to go up for transportation and all that. But the big companies that are selling and trading in oil should see increased profits, and therefore the Thai market could go higher, particularly the energy sector, and that could bring up the market. So Thailand could have a situation where they outperform. That's different from, let's say, China, where the main sector is not oil or energy. The main sector is banking. Okay, Momi says, AWS and AF portfolios have been switched into commodities and gold funds early next week, which are rising now. Could it be that we're stuck at the highest price? Yeah, it's possible that commodities have hit its peak and gold has hit its peak. And therefore, when you get into it, it could fall. It's very possible that that's the case. I would say at this point that it's not probable. And that's the reason why I've gone into these commodities. Even if the war in Ukraine stopped, I think that getting Russia oil and gas back into the system is not going to be as easy as it appears. So I believe that at least for the next 3 months, that commodities and gold could remain high. Remember, I'm going to revisit the portfolios in about 3 months. All right. Lomo Fat Boy, what do you think about the 2 to 10-year bond spread? Well, I think that eventually what's happening is that interest rates start to rise on the long end, and the Fed is keeping rates pretty low on the short end. So we're seeing a widening between the 2 and 10-year bond spread. I haven't looked at it in too much detail, but ultimately what we want to see is a wide spread where we're seeing that long-term interest rates are starting to normalize a bit. But that's something that I haven't done a lot of thinking on, so I don't think I got a great answer for you on that question. Let's continue. What happens if Biden didn't win the midterm election? If Biden didn't win the midterm election, then what's going to happen is the Republicans are striking back at the Democrats. They're going to strike back at Fauci. They're going to strike back at restrictions. They're going to strike back at Biden. They're going to probably try to go through some impeachment of Biden. They're going to just push against the Democrats. And that means that the Democrats and Biden's agenda will just not be able to get done. And so in that sense, the U.S. will be in a difficult situation with not a lot happening. All right, next question from Miss Petite. Next week, we'll expect the Fed to hike the rate 25 basis points. Do you think U.S. stock market will go up if the Russian war is still ongoing? It's going to be hard, I would say. Again, I don't expect that the Fed's going to be doing much rate rising. You're expecting it. The market's expecting it. I could be wrong. I'm one of the small number of people that don't think the Fed's going to be able to increase interest rates. They may say that they will. Maybe they'll do a small one. But what they're going to find is it's going to hit the stock market hard. And when it does, the Fed, I believe, is going to back off just like they've done every other time in the last decade or so. So next question from Lomo Fat Boy. What happens if oil price goes to 300? Inflation is going to go through the roof. It is going to go through the roof. And then what will happen is you're correct in saying that the U.S. will restart its shale production. And also you can say that if, again, high prices are the best solution for high prices. What does that mean? That means that if oil prices go up to 300, it's going to incentivize every oil company to go out there and invest. But remember, oil takes time to do that investment. If you look at a chart of the capex of the oil companies, what you're going to find is that they haven't been doing much capex for the last 5 years. And the result of that is they're not going to be able to bring oil production online that quickly. So yes, higher prices is going to bring more supply, and it's going to make it profitable to get that supply out there. But the second thing also is that it's going to make alternative energy sources like solar and other types of energy sources more attractive. They're currently almost all being subsidized by governments to try to move to the green aspect. But once the oil price goes to 300, you'll also see that renewables will become the talk of the town. All right, Aria says, what assets is the Fed holding? I think I answered this before. They're holding U.S. government bonds and also mortgage-backed securities that are ultimately being guaranteed by Fannie Mae and Freddie Mac. Now, Ms. Petit says, Fed will hike rates. Will we see more fund flows coming to emerging markets? Emerging markets are really get the bad situation. When things are going bad, they lose money. When things are going good, money goes into the West. And so you have to be very careful making that conclusion. I'm not convinced that if the Fed rate hike happens, that money's just going to switch into emerging markets, because part of what it is that bond investors are not going to be just switching into equity, as an example. And not that many people invest in emerging markets for bond exposure. They invest for equity exposure. So I don't expect any big impact on emerging markets if the Fed raises interest rates. Next question, what assets are likely to be sold first? Well, basically, there's a huge amount of government bonds that the Fed will start selling if they start to do reducing their balance sheet. The mortgage loans are a lot longer term, and so it takes longer for them to come off their books. So it'll be government bonds that they'll be selling first, in my opinion. Momi says, do you think the war between Ukraine and Russia will be prolonged, or can it end soon? From what cause? If prolonged, how long will it consume? Basically, this is just my opinion based upon all of my different readings and sources and listening and learning to both sides. I would argue that in the next couple of weeks, Ukraine is going to make a deal with Russia to get Russia out of Ukraine. And they're going to do it by saying, first, they agree that for the next 5 years or whatever, they're not going to go into NATO and into the EU. And I believe that Ukraine is eventually going to probably come to that conclusion. The second thing is that Ukraine's going to have to acknowledge that the country, the provinces in the Donbass are going to be able to be seen as independent countries. I just don't see that the U.S. is going to get involved in it, and NATO's definitely not get involved in it. So that's how I think it's going to happen over the next couple of weeks. Of course, many other scenarios could happen, but that's my primary outcome that I'm expecting. A says, is it a good time to put money in AWS within this week, or should I wait until the Fed meeting? My point for this, A, is that think long-term. Think about consistently contributing to whatever investment style that you have. Consistently contribute. If you get yourself caught up in the idea of, oh my God, I've got to wait for the Fed, you're never going to be sure that it's the time to invest. So whether it's AWS, Alpha Focus, or any other strategy that you're doing, that's the benefit of DCA, is that you're just investing a small amount every period. Yeah, you're going to be wrong sometime and you're going to lose a little bit, but sometimes you're going to be right and you're going to win. Supergorn says, will you see cash crunch happen from credit crunch, and will it cause a system to fail? I definitely think there's risks right now. I mean, just look at Thailand already. When Thailand shut down the economy again in the last couple of months, it is squeezing companies to death. And so I do think that banks are at risk for sure. And we could see some systematic fail. Right now, I would argue that most of the developed countries and maybe even in emerging markets, they're going to support the banking system, because if the banking system collapses, then everything's dead. And so I think the governments will probably pump money into the banking system. Next question from Nana. Sawadee Ka. What Democrat must do now to win the midterm election in November? Ka. Ukraine to win, Russia to lose, lower inflation, bring back better, trade war to continue with China. What will it happen for the Democrats to win? I think it's almost impossible for the Democrats to win at this time, Nana. And my feeling is that the best chance that the Democrats have is if Biden can look like a hero, like he got Putin to the negotiating table and they've come up with a negotiation. If they can place Biden as kind of a preventing World War III, that is their best chance. There's a movie called Wag the Dog, and that movie talks about exactly that type of situation where they ended up trying to start a small war in a country to allow the president to look like a hero. All right, next from OBR. Hi, what is your view on the shift in energy policy of the EU after the war among Russia and Ukraine by reducing dependence on Russia with green energy? It's going to fail, Obi. It's going to fail. Green is not going to be fast enough in Germany in particular and in the EU generally to make up for this cut off of Russian oil and gas. And keep in mind that gas, natural gas, is not just for energy, it's also for fertilizer. And for fertilizer, if you don't have nitrogen that comes from that gas, basically you're going to have a hard time growing crops. So I think that although Europe is going to talk tough against Russia, they have to find either Russian oil and gas or another source. And there's not that many other sources around, but they certainly are revving up in, UAE and in Saudi and other places. Okay, Morgetha says Trump didn't like that Germany buys gas from Russia was the reason that NATO should step down. Well, I think Trump's just saying, look, we're protecting you from Russia, but you're doing a deal and paying them a lot of money. So it just didn't make sense in his mind. But the fact is that ultimately the beautiful thing about business is it brings peace. In order for Russia and Germany to do business together, they have to have peace. If war happens, they're going to be stopped from working together. So capitalism brings peace. Now, when war companies collude with governments to create wars and war machines, that is a problem. But generally, for most of us, capitalism brings peace. Obi says, so that we got that, Obi. We got the links from Phenomena for the episode next week. You can see right there in the section. And yes, capitalism brings peace. P. Tingle 123 says, do you think that inflation in the U.S. will export to the rest of the world? Ultimately, it has to. Inflation will be pushed throughout the whole world. Now, you could argue that Asia is better placed because we have low-cost production. Maybe China is getting low-cost gas from Russia. So maybe Asia will have less of an impact, but generally inflation will spread. Utan Chai Roach says, would it be possible for U.S. bankruptcy if Fed is continuing increasing debt? Yeah, it's difficult to say that the U.S. is going to go bankrupt because the Fed can just keep printing debt. And the U.S. has tanks and guns and war machine that can beat any country into submission. And so it's going to be hard to see. I mean, if the U.S. government tells Thai government or any other government out there that they must do something or they're going to lose access to the U.S. dollar financial system, what's your choice? You don't have a choice. You have to do what the U.S. government says, because if your Thai companies, for instance, if Thai companies didn't have access to the U.S. dollar, they couldn't do business. And that is something where the U.S. still has a tremendous amount of power. So no matter how much debt they're bringing on, I would say that they're not running the risk of bankruptcy. Now, eventually, what will happen is the U.S. dollar will devalue, but that could take a while to happen. Plunpun Suck says, hi, Andrew. How do you see EU economics recovery and come back strong this year? What ECB can do better than the Fed? I think the ECB is really in a bad situation because they already have negative real rates that are minus like 5% with inflation rising. And they've already kept rates super, super low. So I would say that from a European perspective, what we would see is that the European central banks don't have a lot of tools left. The main thing that we need to see in Europe is that energy prices start to come down because things calm down between Russia and, let's say, the West. And that would be the best thing that would start to cause. So if we start to see that, it's possible that we could trade Europe as a recovery trade during that time. All right. Happy life. I like that. In this situation, is it time or should I start to invest in AWS? Well, the question really is, what's your goal? My purpose of AWS is to have people that are looking for a strategy to think about for the next 10 or 20 years. And if you're thinking about a strategy for the next 10 or 20 years, whether it's going up or down today or this month or last month or next month, doesn't really matter much. When you do DCA and you set a long-term goal, whether it's my strategy or any other ones, you're going to win in the long run. So don't let the situation freak you out to such an extent that you don't start investing in anything. And I see many people make this mistake in that they get so paranoid about the market because they've heard so many things that they just don't invest. So my answer to you is DCA is a good way to invest because you're contributing a certain amount every period. I would say just continue to do that. Anita says, for AWS, why do you decide to migrate to gold at this time? Is it now at a peak? Well, part of it is, remember, it's not just a feeling like, oh, I think gold's going to be good. It's referring back to my FVMR structure and methodology. And by referring back to that and looking at what's happening about fundamentals, valuation, momentum, and risk, gold to me right now for the next 3 months looks attractive. Next one, Gentleman Knight W. One more question for everyone. Is it a good time to start entering AWS? I mean, I would say that, again, I would think long term. And I would say that you should continue to invest in whatever strategy you have. Even when it starts to go down, then you're buying it cheaper. But set a long-term goal. Christiana, good to see you from Cyprus, says, or perhaps the banking system will collapse to integrate the digital currency. Yes, it's very possible that we could see eventually what could happen with the US is the US dollar eventually collapse, and then maybe there'd be a digital currency that would replace it. Next question from OBR. Do you think the current valuation of EU is a good position to invest? Yeah, I would say that EU is being beaten down by the situation. So if you're looking for a potential turnaround situation, you want to invest in that style of investing, now may be a good time to start to allocate a little bit to Europe. But you could see a situation where you would have to sustain some losses for a longer period of time than you thought. And if you're playing that trading game in recovery, then I would say nothing wrong with doing that. Tirut A says, hey, what's your view on a chance of recession in 2023? Very high. I think that oil prices being high, inflation being high, interest rates are already as low as they can go. It's not like the governments can stimulate the economy anymore. And what we're probably going to see is markets and the property market prices start to fall. And when that happens, we'll probably see that we will have a recession. So I would say it's pretty high. It's also one of the reasons why we're probably not going to see interest rates rise by the Fed. Salaya Design Craft says, once the war is over, US or EU economy will come back first. I would say that if you're trying to make a play or a bet on the war stopping and what to buy, I think that I would say the best buy is probably going to be EU at that time, not so much the US, because the US is already a bit expensive. Plun Pun says, how you like Biden presidency and Fed action so far? Not that impressive, I would say. For me, the Biden presidency is nothing really interesting that's happened from my perspective. And I would also say from the Fed perspective, Fed action so far, I personally think that the Fed has caused a huge amount of trouble by keeping interest rates so low. So much of these problems would not have been solved, would not have had happened if the Fed had made sure that interest rates were at a market rate. Gentleman Knight says, thank you for your respectful work. Stay healthy and wealthy. And on that note, we are almost out of time. I'm going to wrap up with the last questions. Here we have a question from Supawadi Rapi Pisan. And Supawadi says, how long do you think that we can invest in S&P even there's a bubble in the market right now? Very, very difficult question to answer. S&P 500 is like, riding a wave in the beach, and you're riding it as far as you can go. And many people thought, I got to get off this wave 3 years ago, and they still ended up not being able, they missed a big run in the market. So I would say that I still see some opportunity in S&P 500. I'm getting a little bit more nervous because I think that we're going to start to see markets come down when the Fed starts to increase interest rates. And when that happens, the Fed's probably going to stop increasing interest rates. So we're getting close to the end, I would say, of the S&P 500 run. We've now run out of questions. You guys have had amazing questions. I want to thank everybody on Facebook, on YouTube, for all these great questions, for my friends, for the people who are listening and trying to rely on the information that I'm giving. I'll do my best to continue to communicate to you what I'm thinking, continue to communicate when I'm making mistakes and I'm trying to fix something that I'm doing. And when it's just difficult, I want to always be communicating, always be thinking about the market. And what I want to highlight to everybody out there, no matter what strategy that you have, if you set a long-term goal and you contribute to that on a regular basis, in almost every strategy, you don't have to worry too much about the ups and the downs of the markets. What you need to do is have a good strategy that you follow over a long period of time. And that is going to be the best way of being a little bit like Warren Buffett. He kept his money in the stock market for 60 years. So many people miss the compounding effect because they panic in this particular month or that particular month. So don't panic, stay the course, do the best that you can. And I want to thank everybody. I see Plernpun said, thank you for all the great answers. We learned a lot from your talk. I see that Siracha Panic says, Khob Kun Krap. Thank you guys all very much. Have a great evening ahead. I'm going to relax a little bit. I've been talking all day. Have a great evening. And I'll see you hopefully at the next event that we do that I showed in the link. For all of you, have a great evening and thanks for attending.
พอเรามีเรื่องของสงครามระหว่างรัสเซียกับยูเครนเนาะสุดท้ายแล้วบิตคอยน์เนี่ยมันจะเป็น store of value ได้เหมือนทองคำได้หรือเปล่า
ลากเป็นเทรนไลน์ดูเนี่ยแต่เห็นแล้วว่านี่บิตคอยน์เนี่ยมันเทรดอยู่ในช่องแนวรับที่ค่อนข้างแข็งแกร่ง
NFT ตัวนี้ราคาฟลอร์อยู่ที่ประมาณ 15,000 บาทเลยทีเดียวจากการบริจาคเงินแค่ 3,000 บาท